This is our Forex blog for June 20th, 2014. I haven't really done one of these for about a week and a half. We had some problems with the website, but I am 100% focused on doing our trading signals. So I just recently got around, spent half a day fixing our website, and I'm going to be putting the old blog videos back up and trying to do 2 or 3 of them a week. These are our currency indexes, which is one of the easiest ways of manually trading. But before I showcase that, let me just showcase the results of our Forex signals. And we can go back and look at yesterday's too. You can see the results are outstanding. Very big win, very decent sized win, decent sized win, very tiny win, maybe 2 or 3 pip win, 10 or 12 pip win. I mean, the euro is just doing outstanding. We have today only one loss. It looks like only one loss in the last 2 days in the euro. Nice win here. Huge 10, 20, 25 pip win there. Nice win here, and this is the only loss, it looks like, in the last 2 days, and that's the euro. Here's the pound. By the way, I used to spend an entire day just working on the euro, putting in signals, fixing past ones, and then about 2 weeks ago I would usually get through the euro and the pound each day, and now I'm oftentimes doing 12 of the major currency pairs each and every day. There's over I think 355 patterns in here, and they use about 20 different trading styles: Fibonacci retracements, fib targets, Gann angles, trend lines, and a slew of other ones. So you can see the last 2 days, small win here, nice win, small win. This one's probably a loss, so we'll put an X through that one. We have very tiny win here, and a huge win, and then another tiny loss. So not bad. You know, as long as the wins are bigger than the losses, that's all that matters. And by the way, if you want to see what it looks like when I'm coding this, I do have 355 different patterns, so this lets me see what the trade pattern is, and I can also see the trend lines off of the previous swings, which also let me see the slope of that trend line. So if a currency is making a higher high than the previous swing, I can see what the angle of that is, and I use the angles. It's one of probably 50 secrets I use in coming up with these entries. And some of them obviously are based on our containment bands and our range projections off of multiple different time frames. I use 30-minute range projections hourly, 4 hours daily. I use 4 different containment bands on probably 5 different time frame, other time frame data. The human, if they saw all the different indicators are in here, it's probably 75 different ones. I mean, it might be the same indicator if, you know, one indicator might have 15 different settings and another one has 4. And, you know, it's just too much for a human to watch, but a computer can easily do this. All right, so let me just showcase the euro yen, and the pound yen, which are very hard to create automated systems for, especially when they tend to be choppy. But you can kind of see, you know, very small loss here, small loss. We pretty much broke even on that. Small win and a little bit bigger win here. We are up maybe 17 pips in this last trade. So, you know, small win or decent win, small win gets rid of these 2 tiny little losses, or maybe 3 losses. And again, the key to trading is just bigger wins and losses, or what I also prefer is a system that makes, you know, a lot more winning trades. So you can see there's a win, here's a tiny little loss, nice win. This one ultimately turned into a tiny loss. Then we have a tiny win and a very, very tiny win. And it's not catching all the trades I would take. I would, because this trend is up, I would actually be looking to buy here at the previous day's high. And this also happens to be a fib target of this previous swing here, and it's probably a fib retracement of this entire swing. So you can see it's right around the 50% retracement of the entire swing. It's a fib profit target of this last down move. It's also the previous day's high. So there's multiple areas of confluence that line up there, but getting a computer to recognize all these is very difficult. That's why it might take in the next 6 months to a year another 500 800 patterns to catch, you know, every single instance of all these trades. And not only, you know, is a trade likely to go up, but is it likely to go up enough to make it worth the risk? So these are all the things that I factor in my analysis. So just wanted to do a blog today letting people know that, you know, we have so many international users. We got rid of our toll-free number, and we have a regular phone number now so people can reach us. The toll-free number didn't seem to work for half the calls coming in. People complained, and so I got rid of it. And trying to update my website, I upgraded some Joomla settings or modules that basically made the website administrative interface unusable. So I had to reinstall it and upgrade, and I didn't really want to do that because I'm focused on these trading signals and systems, you know. So if you want to use the currency indexes, they're also very easy to use. You can basically, in a nutshell, see a currency that's trending up, like the dollar. When it goes from below to above its hourly moving average, that's a sign of strength. It's likely to continue, just like the previous day when it broke down here. It was underneath it for 5 or 6 hours, and it's a sign of weakness. But when the dollar's going up today, you can see the euro's going down. And so the dollar's strong and the euro's weak. You basically want to sell the euro dollar. Now, if you're just looking at a regular chart, you would want to be selling pullbacks or sideways rectangle patterns. So here, this one breaks the hourly, and it has a nice little flag pattern at the low. You could get short here. This is an okay short, and this is an okay short. We were already in a trade at this time, so we didn't take this sell. But the system found the high up here, and you know, we were in it for a decent amount of time. And my system uses time as well. If in this particular instance, it's a 78% fib pullback over a very long time frame. Here's the 78% fib right here. 4 or 5 bar wick reversal at this level without that much statistical strength is a very high probability trade, and of course, you know, it led to this big move down. Let's look at some of the other currencies that we don't normally trade. Well, you could look at the euro here. It's weak. The pound's going up. That means that you can look for. Sells in the euro pound. Earlier today, when you know, the euro was weak and the pound was strong, basically, you know, any kind of trend line break, counter trend move up, you want to get short. You know, here's a decent one, and the stronger the better. And once a currency kind of goes above its last little swing high, it's possible at that point where the trend is no longer down. So if you sold here, be aware that this might be the end of it, and of course it is. And that's one of the things I do in the trading system. So I'm always analyzing the swings, and as long as it's making lower highs and lower lows, it's in a downtrend. As long as it's making higher highs and higher lows, it's in an uptrend. For instance, you know, here I made a higher high, higher low, higher high, higher low. Well, guess what? This last high here is not higher. It might be the end of the downtrend. So once it makes the uptrend, once it makes a lower low, you know, and lower low, and lower highs, you know, you're in a downtrend there. So that's what the whole, you know, nuts and bolts of that tool, our signals, does for you. Later in the day, the pound was down, the CAD's clearly up. you could look for sells in the pound CAD. It's that simple. And that's why our currency indexes are so powerful and so easy to trade with. Now, this was such a big drop that you might not have caught it. You might not have, there really wasn't much of a pullback. You have a nice little rectangle pattern here at the low, and it went down another 30 pips. But basically, our currency indexes make it very easy to know which currencies are strong and going up, which ones are weak and going down, and all you have to do is buy the strong versus the weak and sell the weak versus the strong. That's basically what I'm trying to teach the computer to do with the signals. It's very easy for a human to do it without any of the other indicators, actually. You know, the hourly moving average, value areas are containment bands. You might want to put the range projection on there just to know when it's likely not to go any lower. But it's pretty easy to trade with just the currency indexes and regular charts.